Get ready to learn forex trading from scratch. I, Akinwole Victor, will be your tutor for 6 weeks. I'll be teaching you trading from scratch, from beginners with how to know knowledge without knowing what is forex, to an advanced class where you can be able to analyze trading charts yourself, take trades, identify patterns, manage risks, manage emotions, and be profitable in the forex market. I'll be taking you a 6 weeks course on forex trading from scratch, like I said, and I'll be releasing a YouTube video at least 3 times in a week. So if you've not subscribed on this channel, kindly subscribe now, because we're about to dive into the world of forex trading. We are going to unlock the secrets of profitable forex trading. Let's go. I step profitably with VstreakFx Academy. Still on a free crash course on the full forex blueprint, trading from a beginner trader to an advanced trader, having a full understanding of what forex trading is and how to trade it profitably. Our topic today is candlestick patterns. I think our previous video, if you've not, that's in part 4, yeah, with trading view configurations and how to use trading view successfully. So today we are working on candlestick pattern, and stay tuned as we move on. So candlestick pattern going on. So to ask yourself first, what do you think candlestick is? What do you think candlestick, like the normal traditional candlestick, which we all know is the the normal traditional candlestick we all know is the one we use in lighting up our house, the white. I don't know, I think some are red. The main one I have in my country and my locality is the white one, having a wick inside, and that wick is what you light up, and that's what produces the fire. And I think as it burns down, it keeps burning the wax and the like. So it's just more of like that. But this candlestick here, when we're talking about it in trading, because candlestick is not just used in the forex market, it's used in the stock market, it's used in the index market, it's used in synthetic market, in the crypto market, because it's just for displaying information. So what can you call what can you say candlestick is in relation to forex market? You can ask yourself that question first. Pause this video and think of it. Think of it. Yeah, good. So candlestick is a way in which the charts or an asset display its price movement. So a candlestick is a way of displaying information about an asset price movement. I don't know if you're with me. When you have a candlestick on the chart, it shows where the price is at the moment. It shows A candlestick shows what buyers or sellers are doing in the market at the moment through either the formation of those candlesticks to form a structure, to form a particular pattern. Candlestick, what I specifically use that candlestick for, apart from it forming a structure for me, I also use it as signals in taking my trades as my area of interest. Very, very important. So the candlesticks just tend to actually work a lot without the candlestick on the chart. Though we have people who trade with line charts, with some you can actually view your asset price movement using a line chart. I think using I don't really know, to using bar charts. I think there's bar chart and the like. So you can actually display, but most traders display their price movement of the assets using the candlestick pattern. So candlestick charts are one of the most popular components of tech analysis, about tech analysis, which I spoke about in the part 1 of this video, and enabling traders to interpret price information quickly and from a few price bars. Yeah, so from like 1, 2, 3, 4, 5 candles or 100 candles forming together, forming structures, highs and lows, you can actually detect what the price is doing at the moment, who is presently in the market. Because we know those in the market, the candle does not just move on its own, it moves by the activities of buyers and sellers in the market. And it does not just move on their own, it shows ability sorry, I got distracted. So it shows what buyers and sellers are doing, which we all know. And at the past, and again, I spoke about time frame, yeah, in our last class, which was during the trading view, using trading view. Yeah, so I spoke about time frame. So it still shows to us what buyers and sellers is doing at every time frame, because candles open and close in different time frame. If you're on a 30 minutes time frame, the candle open and close every 30 minutes. I don't know if you're mean. So it's price bar opens 30 minutes, if the next time it's price open and then new bar 5 minutes. That's how it works. So the candlesticks helps in displaying that information. And we have two main kind of candlestick. We have the green and the red. Though we have other traders giving it different colors, some use black, some use white. I specifically make use of red and blue. So you just have, the red is a sell trade, and the green or the blue or any color you paint it is a buy trade, or buyers are in the market at that particular minute. So the wick, okay, the body which represents the open to close range, the wick or shadow that indicates intraday highs and lows. We have wicks there, more of like your normal traditional candlestick. We have the color which reveals the direction of the market movements, either a green or white body indicates a price increase, and a red or black body which shows a price what decrease. So candlestick pattern, in order to fully understand what the candlestick is and what is represent, we need to understand time frame, which I spoke about. We need to understand what time frame is, and I spoke about it in our previous class. Time frame is all about the time it takes for a particular candle to open and close at the particular time frame in which that asset is on. We have the 5, 15 minutes, daily, 4 hours, and 1 hour time frame. It's on your trading view. At the top of your trading view, you see it there, the particular type of time frame you want to use. You make it your favorite, and you see it always displaying on your chart. So by working our way down the time frames, we can see what is happening from a long-term view to a short-term view. So the candlestick, like I said, it forms structure after a lot of candlesticks. We have structures being formed. We know what is happening at the market by the structure being formed. So we scaling from what has happened on the daily time frame, 4 hours, 1 hour, 30 5 minutes, 15 minutes. We can know what is actually happening on that asset, either a long time or in the short time view. So we have types of candlestick pattern which we have. I'll just give you basic. We have a lot of different candlestick pattern, but I'll be giving you the basic ones which I tend to use most times on my chart. So we have, let's do the identification of the candlestick. So we have, look at how it looks like. You have a wick, you have a body. This video will split it into two parts. This is going to be the part one of the slide view, and every of the candlestick we'll be talking about here, I guess we'll be doing a spec just to cover it extensively within a chart view of it, where we'll be identifying all the candlestick pattern and seeing the price movement of them. So stay tuned. It's going to be an interactive video. So increasing bullish candlestick. So you can see, look at how a candlestick look like, the one which on the chart. The green, we have the body, we have the eye of the candle, we have the low of the candle, we have the open, we have the close, and we have the body. This is a green body here. And for the red, we have the decrease bearish candlestick. We have the eye. We have the opening of the candle. We have the close, meaning that the candle is opening here at a particular price of 10 naira. It's closing at a particular price for a sell trade. It's closing at a particular price of 5 naira. Let's say the price was 5 naira when the price opened, and when the price was going to sell down, it's closed at 5 naira. So that's how it can be. And let's say for a bullish candle, let's say the price opened at 20 naira or $20, and it's closing at what, $100. It can just be that same way at that particular moment, understanding what time frame is. So we have the different type of candlestick. The first candle I'm talking about here is the hammer and the hanging man. The hammer candle looks like this, where we have a body which is a red body. Sorry, the hammer candle looks like this. Sorry, we have, it's just to show that buyers are actually kicking in. We have a long wick and we have a small body, a long wick and a small body. With this long wick, shows that buyers are actually hammering out the low. Let's say the price got to 5 naira, and buyers came into the market. They are trying to push the price down. Notice the opening. They are trying to push the price down to, like, let's say the price open at 5 naira, and price is kind of like pushing all the way to have more values to, like, let's say $100. I don't know if you are me. So hammers and hanging man. So this an hammer candle. It signifies to traders that what buyers are actually kicking in, that there's a present level of support there, that the price wants to actually push for a uptrend or push for buys, and you get to see this candle. It's going to be green in color and a long wick. We'll get to identify on the chart. So hanging man looks like this. It's just more of like an inverse of this or something like this. But it's going to be a red. It's going to be in the red color. And sometimes take note. Sometimes we have an hammer uh, that is also red color. The main thing that really signifies to me is this week, having this week rejection. Let's say your normal traditional candle burns from where you bought it down to almost the closing or the ending of the candle. So buyers are actually pushing. So the main thing I really want to see is that push. I don't want to see this weak rejection. I really want to see the body of the candle being pushed up or being closed up like this. You get, this is like a full candle. If buyers are to push it down, we'll have the price pulling all the whole body to the upside. So for the hanging man can just be like this, but it's going to be an inverse of it, whereby we have a long wick and a small body like this, showing that sellers are actually pushing the price down, reaching a level of resistance to push the price down. So let's look about more about it. So the hammer is a bullish reversal pattern that forms during a downtrend. It is named because the market is hammering out a bottom. Let's say the price is getting down to a level where it does not want to go down, is priced at the down level, and at that level it does not want to go down, it does not want to go less, and when it get there, it's actually hammering out a bottom. The price is trying to push up, so it's trying to show that yes, buyers are kicking in. You get to see that hammer candle formation by the activities of the buyers and sellers in the market. So when the price is falling, hammer signals that the bottom is near, the price will start rising again. The long lower shadow indicate that sellers push price lower, but buyers were able to overcome the selling pressure and close near the opening. Just because you see a hammer form in a downtrend does not mean you automatically place a buy order. More bullish confirmation is needed. Yeah, you can't just trade the forex market with just seeing a candlestick formation that yeah, this is the hammer, this is the, there should be other confluences that will actually make, or other confirmations that will make the trade an A setup for you. So we have the doji candlestick, which is also called an indecision candlestick, whereby is displays more of like a dash. We have weak equal wicks, and it does not have a specific color. It can be green, it can be red. You just want to see a dash and an equal wick. It's what's the signal is indecision, meaning that let's say price open and closes where it was actually price open and close where it was where it opened, like let's say price opening at $10. When the price be closing at that particular time frame, it still be closing at $10. So that's how the doji, I'm sure you didn't fully understand what candles time frame is to understand how the candlestick actually works very well. So the doji is a single candlestick pattern. It is the only candlestick that is neither bearish nor bullish. This is also because the doji represents a neutral state, like an indecision, just an indecision state. Does not know what to do, it's just there. I open $100, I'm still, maybe after 1 hour time frame, or after 1 hour I'm still closing at that particular $100. No decisions, a neutral state. So where the price closes exactly where it has opened. For this reason, the doji has no candle body and it looks like a dash. Sometimes it's even a black color, depends on your broker. So they will have the bull, we have on this one of my favorite, this is my favorite, which I use very very well, the bullish engulfing. I love it so much. From the word engulfing, it means something taking charge, something taking over. So we have how it forms is more with a two candlestick formation. You have a red candle and you have a green candle as the second candle. From engulfing, you know, when you hear what bullish means, buyers are pushing in. Bullish is a buy, the price increase. So when you see bullish engulfing, meaning that buyers are what covering the seller. So what you want to see is that the second candle, which is the green candle, must cover the body of the first red candle, meaning that what buyers are what taking charge of the seller. So bullish candle closes above previous candle opening. Bullish candle opens at or lower than the previous. Depends on how it wants to open. What we want to just see is that green candle covering the red candle, showing us that buyers are actually overpowering the sellers. So the bullish engulfing pattern appears during the bearish trend. It consists of a bearish candle followed by a bullish candle that engulfs the first candle. This pattern suggests a bullish move will soon occur. So it's just like that. The bullish engulfing is just trying to show you that we are buyers, we are coming here to take over. And one thing I want you to note that every candlestick we are talking about, as we're having a buy side, we have the sell side. I think it's only doji that does not have the sell side. So we still have a sell side for a bearish engulf. When you want here bearish, bearish means price dropping, price decreasing. So let's say now we now say bearish engulfing, meaning that what sellers was covering the buyers. Bearish engulfing, meaning that sellers are taking charge. So this is going to be a reverse case. So in this one, we have a green candle first, and we have a red candle as second candle covering the body. This is, but don't forget, this is the body. The body, this is the wick, this is the body. Covering the body of the first candle, which is going to be the red candle. So that's how a bearish engulfing candle looks like. It shows that what sellers are kicking in into the market and are ready to take full charge. So the bearish engulfing pattern appears during a bullish trend. It's consist of a bullish candle followed by what a bearish candle that engulfed the first candle. This pattern indicates a bearish move may soon be forthcoming. I don't know if you're me. The bearish candle pattern appears in a bullish trend. Let's say price is going up and it gets to a level of resistance where it wants to sell. So it's kind of a bullish candle followed by a bearish candle that covers the body of that first candle, which is the green candle. This pattern indicates a bearish move may soon be forthcoming. So we have this is my second favorite candlestick pattern which I use the most. If you check my Telegram channel, see the trades I call there. These are more of these two bullish or bearish engulfing morning star or evening star, which we were talking about last, is the candles I make use of in when taking my trades or taking decisions or using. I use it mainly as a signal or as my area of interest. So we have this is a three combined of three candlestick. We have the first, which is the red candle. We have the second, which is a small indecision like a doji, and the third candle will be a green candle. So for a morning star shows a buy candlestick pattern. It forms just three candlestick formation, and that third candle, the body must cover at least half of the second of the first candle. Note this is the red candle indecision and the third candle. Note that this third body must cover half of this red candle to verify that yes, this is a real morning star candlestick pattern. When we get to see this at our area of interest, we know yes, buyers are actually kicking forth and we are ready to buy. So we have the morning star pattern occurs during the bearish trend and signals an upside reversal. This starts with a bearish candle and is followed by a small bearish or bullish candle that gaps down. Then the price gaps up and form a bigger bullish candle. That's the green candle. We have a red candle, a small indecision, either red or green. No indecision can be red, green, it depends on the color. Just want to see that equal wicks or just that rejection. The third candle of the pattern should cover at least half body of the what of the first candle. So these are the evening star. Oh, this evening star. I told you when we have anytime we're having in the bullish, we have it in the bearish. So the evening star candlestick is just more of like we having a green candle, just an inverse. Then we have an indecision red. Then the third candle will be a red candle. The third candle must cover half of the first candle to be an evening star. This is how it looks like. So the evening star is the opposite of the morning star, which I said, when we have the bullish engulfing, we have the bearish engulfing. Yeah. So it appears during a bullish trend. Let's say buyers are price is pushing up and signals a downtrend reversal. This pattern starts with bullish candle followed by what a small bearish or bullish candle that gaps up and down. You get, so we just have more of like a green candle indecision and a red candle that must cover half of that first candle. The price gaps down and form a bigger bearish candle. The third candle should cover at least half the body size of the first candle. These candles are candles that when you use repeatedly consistently to give you signals will actually give you a wonderful result of at least 50 to 60% win rate of your setups. So this is all with the candlestick. Please note that candlestick is primary, but structure is secondary, and structure is the main thing. Structure is the main thing. How the market is being formed. Candlestick is just for your confluence to give you signals that yeah, it's time for you to buy, it's time for you to sell at a level or at a price which you see that yes, this level or this price has value to push the upside, and you are looking forward to what to buy from that level. So stay tuned for the next video of the candlestick pattern. That will be where we'll be looking at the chart view of every of the candlestick pattern we've mentioned there and seeing the work. Stay tuned. If you have any question, drop comments. If you want to contact me, I'll be dropping my number and my IG contact on the description. Do so to click on it and get a DM with me.